I don't know if we're going to see another housing market crash. I have mixed feelings about this. Do I think we are in a bubble? Some people saying the stock market is a Ponzi scheme. It's been perverted a little bit since then, I feel like. The 401k was introduced in 1978, and that's played a big role. The government's going to give you, some money. It doesn't seem like anyone's really evaluating companies, or at least individuals or retail people are looking at like price to earnings ratios anymore. Stay tuned till the end if you want to win some money.
So what was the last bubble we were in? Is that the internet bubble?
Depends what you define a bubble as. I mean, 08, 09 kind
Things
of
that go pop.
Yeah, there's like the housing market bubble. 99, 2000, there's the .com implosion, explosion.
Yeah, I think the 08 housing crisis was probably my favorite. I hope we have another one.
Yeah, who knows if that'll happen.
Because it didn't really affect me at the time, which was nice. But the music that came out of there, we used to listen to The Recession by Young Jeezy on repeat. So good.
I don't know if we're going to see another housing market crash. I don't think the loans have been as irresponsible. I don't think everyone has taken out ARM loans at favorable interest rates and then having to refinance at
Yeah, but what's going to happen?
Percentage rates.
What's going to happen with this AI bubble, though? Or is it even really a bubble?
Well, there's a lot of talk about if we're in a bubble or not. It's hard to say. There's a lot of questionable accounting. There's
that's always going to happen, though.
Yeah, a lot of people are calling circle jerk investing going on.
Yeah, there's some funny memes about that.
Yeah, part of me thinks we are in a bubble, but I mean, realistically, we're either in a bubble or coming off a bubble. It seems it's always boom and bust cycles. I've seen a lot more people claiming the market is a Ponzi scheme.
Really? I've heard that about AI. I haven't heard that about the stock market yet.
I have mixed feelings about this. Do I think we are in a bubble? Yeah, probably. Like, we're always in a bubble. It's always a boom bust cycle. Like, we always lever up and then blow up. Like, I don't know. Is AI going to be as impactful as people think it is? I don't know. In some ways, I mean, there's a lot of things like airlines are pretty impactful. I mean, there's pretty much nowhere in the world I can't get to within 48 hours of just hopping on a plane with not even like a substantial amount of money, realistically. I would say that's pretty impactful. Airline companies have been bailed out about 1 billion times. They're not all that profitable. So, like, yes, it was impactful, but...
Right. I think we talked about that too when Jordan was on too. It's like, let me and you start an airline company. And
right.
Yeah, like, let it go.
Is AI going to be impactful? Yes. Is it going to save every company trillions of dollars? I don't know. Maybe, maybe not. I'm sure some will, some won't. People just think it's like the future and the next big thing. And I would agree with that. But what's it worth?
Yeah. What's it worth and what's it cost? Like,
Right.
I know you're probably talking about worth in terms of dollars, but like, I sit through some meetings and people are like, oh, just use AI. And like, we're losing so much creativity.
Oh my gosh.
It's driving me nuts. Like, I try not to use it. I like to learn about it to know what it can do, but
it seems like the biggest use case, at least in my life, or I don't use it at work, obviously, I just well.
Right.
I use ChatGPT from time to time in place of search engine stuff or to quickly gather information from a lot of different sources and basically just like tailor a small short report.
Sure.
And I find it super useful, but LMMs aren't like the most profitable part of AI. Other than large language models, the AI stuff I've seen is just like terrible. Like, if you're in any Facebook groups and they just like ask a random question, it's like, this is the dumbest question ever. Like, nobody in this group wants to know this.
Right.
It's like they're trying to create engagement and everyone's just like, turn it off. Like, this is terrible. Like, no one wants their feed clogged up with like just the most entry level, vague, meaningless questions.
Yep.
And even scrolling through Marketplace, I found a car for sale, an 80s Mustang, and they're like notoriously make no power.
Right.
Like, no power.
It was the 80s.
And I'm like scrolling down and it was like AI overview and it was like a sales pitch and they're like,
oh my God,
available with like high power 135 horsepower engine. I'm like, what? Like,
just
this
stop.
is like a garbage brochure read. Like, it's terrible. Like, no one is asking for this. I feel like everyone's just pushing for AI or they're trying to implement it, and like it's just like a solution in search of a problem.
Right.
And the creativity side of it sucks too. I've seen more and more garbage videos. You see, like when you're scrolling through shorts and reels, it's like every third one's just crap generated by AI, and it's like, oh, that wasn't very entertaining. So outside of a bubble, some people saying the stock market is a Ponzi scheme. So basically, you buy into the stock market and you hold on to the stock and you hope to sell it for more. Is it a Ponzi scheme? By definition, no, not really. I'll pull up the exact definition here. I'll read something off quick for those listening. More or less high-level synopsis. Ponzi scheme is basically you're paying out new investors with old investors' money, and people have to be worse off than when they started or damaged financially in some kind of way.
Often a lot are.
Yeah. So by definition, any stock that pays a dividend is not a Ponzi, just by definition, which dividend stocks are like half the market, roughly, if I recall. I might want to fact check that, but so about half the market is excluded from that. The other half, you're basically buying a stock and then in hopes to sell it later for more. Does that sound like a Ponzi? No, not really. But then also when you look at today's valuations of a lot of companies, they're kind of all over the place.
Right.
And at all-time highs.
Yeah, I don't know. I feel like with a lot of things you can, like not just Ponzi scheme or the market, but I mean, if you want to make a definition fit something, you can usually do that.
The biggest thing I have a problem with is just like valuations of companies. They're like all-time high expensive, and some people have said that the stock market is really nothing but a relief valve for inflation. Like if we see a bunch of inflation or low interest rates, like people basically borrow money, put it in the market, and drives the market up. So that really doesn't have anything to do with like how the company's performing, if they're making, if they're buying back shares, they're paying down debt. Like it really doesn't, it has nothing to do with the company at that point.
It's separate.
Yeah. So I can understand that angle. The U.S. stock market was established in the early 1700s, and it's obviously changed shape, and New York Stock Exchange was later in the early 1900s. It's changed a lot since then. It was created to allow companies to raise capital for growth. So you could basically have ownership of a company. That way they could have access to more money, make the company bigger, make you money.
Sounds like a good idea.
Right. It's been perverted a little bit since then, I feel like.
Yeah.
The 401k was introduced in 1978, and that's played a big role. A lot. Obviously, all your retirement dollars in a roundabout way either end up in the stock market or the bond market. So there's a lot of dollars currently, like every day you work, every hour you work, like you're adding to that pile. And you got to buy something with it. Right. So it's like, are you putting money in your retirement because you really think Procter & Gamble's doing a really good job and you just really want to buy it? No.
Yeah, you just want to be well off in the future.
Yeah. So whenever there's a lot of inflation on the horizon, the stock market usually rips to all-time highs or, makes a big move upward. Dollars have to go somewhere. If you're anticipating a large amount of inflation, like the last thing you're going to do is just sit on dollars. Like we've talked about that. And if you're trying to save for retirement, you are light years behind everything else. If you just put money in a savings account, you probably won't be able to afford anything like housing or food. Like you're just dramatically going to be behind. So talking about company valuations and how they're kind of dislocated now, there's different metrics you can look at in regards to market value. And one popular one is the Shiller-Cape ratio. I think, Jordan, you might have mentioned that when he was on. It was developed by Robert Shiller.
Oh, yeah, he did mention that.
And it basically measures the stock market valuation by dividing the current stock price by the average of the last 10 years of inflation-adjusted earnings, smoothing out economic cycles to show long-term trends. So it gives you a good inside view. If you strip out inflation and other cycles, it's like what is Nvidia trading at compared to like a 10-year average? This is the second time ever the CAPE ratio's ever been this high. The only other time it was this high was in the late 99, early 2000 in the tech bubble. Today's CAPE ratio is roughly, and this is in late 2025 when we're recording this, is roughly 40. In late 99 to early 2000, it was 44.2.
Oof.
So it's indicating we're very overvalued. Is that because we're in a bubble? Perhaps. Is it because we've seen a lot of inflation? Perhaps, or a combination of the two. So there's a lot of dollars chasing assets, which drives the price up, whether it's from normal investment or retirement accounts. The latest information gathered, present-day best estimates project that about a quarter to a third of U.S. equities are effectively held by retirement accounts.
Wow.
Which is a pretty substantial amount of dollars. You think a total U.S. market cap is pretty large. Like, that's a lot of dollars. And you got to buy something with those. So, like, you don't only buy them when they're a good deal. So, like, there's just a pretty substantial amount of dollars pouring into the market. It just drives the price up. So it's kind of artificially inflated by retirement accounts, since pensions aren't really a thing anymore, or at least not as widely as they used to be.
Yeah, that's wild to think about.
Another thing that's been in the news recently is Trump accounts are going to be taking effect mid-2026.
What are Trump accounts?
For those of you that haven't heard about this, the government's looking to give each person under 18.
Oh, yeah. I have seen this.
Yeah. There's caveats to this, but basically people under 18 in certain zip codes, the ones that aren't as financially well off, are going to get $1,000 in an investment account that'll basically get stuck into the market, and then they won't have access to this money until they're 18.
Sure.
And it's essentially going to kids they think don't have the same economic opportunities or exposure to compound interest, and kind of introduce them to the markets and see what the power of compound interest is all about. I have mixed feelings on this.
Yeah.
I mean,
do tell.
I mean, who doesn't want $1,000 put in the market for you? I mean, yeah, but what problem does it solve? Well, it gives somebody $1,000 and it grows, and then they get it when they're 18. It's like, if everything else is messed up and housing's unaffordable and everything else, like, well, maybe they just buy groceries for a year. Like, I don't know. Like, what are they going to use the money for? When you turn 18, you're not really thinking about retirement. Maybe you want to go to college and you could pay for college with it. I don't know.
Or how many people are just using it for consumer goods?
Right.
Like, can they just
blow
it on a car or what?
Exactly. Like, is it just going to inflate other unnecessary assets? Like, they're just going to all buy a new car or whatever, or what's becoming more popular? Are they just all traveling?
That better for the economy, though?
I don't know. But then, like, what's the point? Just print money and give it to people. Like, that obviously doesn't work. Like,
right.
Stimuluses don't work, or not the way that they're intended. Like, you look at COVID stimuluses, and a lot of it just ended up in the market. Like, people just invested the money. That doesn't really, it's not consumer spending. Like, you didn't go give the money to a business, in your town. I don't know. People aren't typically that fiscally responsible at 18. So is it really going to benefit them? Maybe, maybe not. Michael and Susan Dell, who were Dell Computers,
okay.
They pledged $6.25 billion to help fund these accounts.
What?
They've been catching kind of a lot of heat for doing that, which I don't know why. Like,
I mean, it's their money. Let them do what they want with it.
Yeah, like, find something else to complain about. Like, I don't know.
Right?
Anyway, they're doing it philanthropically. Good for them. I don't have a problem with that. Some other research on this: individuals can contribute up to $5,000 a year. The goal is to help people fund college and or retirement and get them exposed to the power of compound interest. A quarter or a third of the dollars in the market is from retirement. Mm-hmm. So, like, what does that do to asset prices of things in the market, or companies, or equities in the market? And drives the price up because there's more and more dollars chasing the same amount of assets. So what is all this extra money into the market going to do? Probably raise the valuations of all these companies, which is whatever. Who owns all the equities now? Old people. Like, most stocks are held by, the top 10%. I think like half the market's owned by like the top 10% of people. A lot of them like baby boomer generation. So, like, I don't know. Are they doing this out of the kindness of their heart, or is this like an exit strategy for baby boomers to sell their shares to live, have dollars to live off of? I don't know. A kind of funny thought I had the other day. It's not really ultimately, like, where's this money going to come from? So, like, the Dells are pledging this money, as far as I know, one time. So this isn't like in perpetuity by any means. So where's the rest of the money come from? A lot of other people pledges and stuff, but ultimately probably from the government. So who pays for that?
They just fire up the printer again.
Yeah. So who pays for that? Taxpayers, or we just don't pay for it like most other things. But the thought I had is, you're giving people money, and I just immediately kind of draw to a similarity or a comparison to Social Security. I was like, is this going to be like a Social Security replacement or like the next Social Security?
Right.
It's like,
where are you getting at?
The government's going to give you, some money. And anytime the government tries to give you money or just basically do anything, they're not as efficient as just natural flow of economics.
Remember, I think I sent that meme too. I should put it up on the screen here for you guys of like things the government touched and like everything went up. And then it was like things the government hasn't touched. It was like TVs and smartphones and stuff. And those actually came down.
Yeah. You look at anything the government tried to make more affordable and the prices go up. Like even if you take into consideration like rent freezes, like people think sometimes to make housing more affordable, they'll freeze rents. And it's like, well, what happens when they freeze rents? It's like, well, people stop fixing the places up. People don't build new places to rent. Like living situations get worse. There's less supply. What happens when you have less supply? It gets more expensive. So you end up with like more expensive place to live that's shittier. I know when they're talking about when the government was shut down the last time, like SNAP benefits and stuff, the government like likes to manipulate numbers. And they're talking about like for every dollar spent of like taxpayer dollars in SNAP benefits creates like $1.80 of value. It's like, why don't you just take all the money then?
Right.
It's like, well, because we don't get $1.80 back. Yeah. Like they just like magically multiply the money. Like somehow they're more efficient at spending it than I am. I'm really curious what these people are going to use the money for and what it's going to do to the market. It's not like people are buying companies because they think they're valued well anymore. It's like everyone just throws their money into the market because they don't want to lose money. Otherwise, they just inflate it away. Is it a Ponzi? I would say no, by definition. But has the market been perverted? Yes. Another great example, everyone all over every platform has been, I'll say, complaining. I'm not saying that in a derogatory way. I definitely agree. Other costs that are going through the roof, health insurance or healthcare.
So bad.
Why? Not why are you complaining? Why are the expenses going up? Insurance. I am not a fan of insurance. I'm not saying I don't have insurance, but it makes everything more expensive. Dramatically more expensive. Like you pay money to have health insurance every month. So when you go to the doctor, you can pay more money. Mm-hmm. Like they just have record profits. And that was another thing the government's been back and forth on, is one party wants to keep Obamacare and the other party wants to get rid of it. And all Obamacare did essentially was cap the percentage profits that these health insurance companies can make. Well, that sounds terrific. But then you know what happened? They just let prices go through the roof.
Yeah.
So they make more nominal dollars than, nominal value than they do on a percentage basis. It's like they don't care if the costs go up.
Right.
They can just charge more.
Wow.
So all it did was make everything more expensive. Everyone online's like, 30% more. Everyone's health insurance rates are just going up and up and up and up. I don't see a whole lot of positive from the equation. I mean, if you give everyone a bunch of money, it just makes stuff more expensive. So like, are you any further ahead? And then you add the government in the middle. Like it's just not efficient. So it just makes it worse. So like I guess the biggest thing is like, what are they going to use the money for? Say it's college tuition. Well, it's just going to make college tuition more expensive. It's like, are they any further ahead? So like, does it just prop up the market for baby boomers? Baby boomers own like 50% of equities. So like, is it just their exit strategy? Like now they have somebody to sell to because there's a lot more baby boomers and they have all the money. It's like, well, if they need to actualize that money or sell it to somebody, who are they going to sell it to? They own everything and nobody else has any money. So I think the market's definitely perverted to some aspect. I think about this all the time. I'm a big fan of like free markets and not a lot of regulation, but that also doesn't work. Like if you had no regulation, like one company would own the entire oil industry. Like ultimately there would just be like one winner. Like when you have all of the resources, you're just going to own everything. Like you look at Bill Gates, I think he owns like, I don't know, hundreds of thousands of acres of farmland. It's like if you wanted to, you could just keep buying all of the land. And it's like, well, if you have all of the land, you have all of the control. And it's like, you want to charge everyone for water or lumber. I mean, you just, what's toilet paper made out of?
Right.
It's a paper product, comes from trees. So I mean, ultimately there'd only be like one winner. And then typically what happens then is you overthrow people with all the money and all the power, and you just repeat the process again. So like there needs to be some regulation, but there's just kind of a hard line between no regulation and over regulation. I think we just tend to over-regulate. I don't know.
So before we started recording, we were talking about, I've got 2 different 401ks one from my previous employer that I haven't rolled over yet. Is that even worth doing? Like rolling it over, or even self-managing into a 401k on Webull?
I think it's like anything else. You kind of get out of it what you put into it. It depends on the performance. Like when I was having someone manage one of mine, the performance wasn't that great. And honestly, I could have just not paid fees and put it in the S&P 500 more or less, or a total market index, and have gotten better performance and not paid fees. So like it didn't really make much sense for me to pay someone else to have lesser performance.
Yeah.
And it's not all about rate of return. There's more strategy than just what's the biggest rate of return. Part of the other side of that coin is risk mitigation. So if you...
Well, that's why I bring it up too, because with this bubble, it's like, how much am I risking?
If you put it all in NVIDIA, and I'm not saying it will, but like if NVIDIA were to tank, which I don't think it will, like you're kind of exposed at that point. I would say the biggest thing to think about there is how much effort you want to put in and how much you want to learn. It's not even a bunch of effort, I would say. It's more how much learning would you like to do about the market. It's like I'm interested in this stuff, so I take the time to do it. Like Ben Franklin said, an investment in knowledge pays the best interest.
Sure.
So could you probably perform better? Potentially. But I mean, if you were going to roll it over, do you know what you'd invest in?
Yeah, you make a good point there.
It's like I thought I could have better performance, so that's why I ended up managing my own. Unless you had like a really good investment opportunity or buying a rental, or you had some kind of strategy as far as cashing out, I don't really think it's worth it because you're going to end up paying tax on that and penalties and related things. So unless you had like a really good opportunity, I probably wouldn't. If it's performing well, like I think at one point you said it was performing better than the one that it's currently in. So I don't know. It doesn't make a lot of sense. That's kind of a no-brainer. You might as well leave it alone if you want to put no effort in and get better results. Like, I don't know that I would hurry to roll that over.
That's kind of where I was thinking, too. We don't talk about the market as often as other assets.
I guess to wrap up here, do I think that we're in a bubble? Most definitely. I mean, it's just cyclical. I mean, I guess it just depends on what you're going to classify as a bubble, but it's over and over and over again in boom and bust cycles. I think the market will go higher before we see a substantial pullback, but I think when we do see a pullback, it'll be pretty healthy. It's really hard to time the market. I wouldn't sell everything now. Every time someone predicts a bubble burst, like the market like doubles and then pulls back 30%, so like you'd be money ahead to just stay in the market. Timing the market's always a bad idea.
Do you think company valuations are realistic?
Depends on the sector and stuff. Related to AI, not really. I mean, it's basically just a giant bet on the future. It's basically what are the company's earnings going to be 5 years from now, not what are the earnings today. So some of them are kind of unrealistic. Like NVIDIA, last I checked, was at like 53, 55, or 57 times earnings. Like it's kind of insane. So does that mean I think that the price of NVIDIA is going to come down in relation to like its earnings? No, based on their earnings growth, I think what's more likely to happen is their earnings are going to continue to grow. Who knows what's going to happen to their share price, but say it stayed the same. If their earnings go up, the PE ratio comes down.
Could you imagine if water was 57 times its value?
There's other companies that have just pledged. OpenAI is a big one that everyone keeps talking about. They've pledged an awful lot of spending, and their revenue doesn't really meet their debt obligations currently. So they're going to have to take on more debt to meet these obligations. Do I think some of these companies are going to get burnt? Probably. Some are going to make it and some aren't. At the end of the day, this bet on AI is all about like money. Do I think AI is going to be big and impactful? Yes. Who is it going to impact the most? It's hard to say. Is it going to be you and I, or is it going to be businesses? A lot of lower value add jobs are going away. You're seeing recent college graduate unemployment is at like an all-time high. I think it was like 11% last I heard, which is like it's never been higher. which like who's your low value at? It's like your interns and your fresh out of college graduates who basically start at the bottom. So a lot of those jobs are going to go away, and then, you know, companies make more money. As far as you and I, like, not many people I think are willing to pay, you know, X amount of dollars a month for LLMs. So I don't think that particular area of the market is going to be wildly profitable. NVIDIA making chips, yeah, that's pretty helpful. I mean, at what cost? Their chips are pretty expensive. NVIDIA has stated that their next competitors, there's been some pretty big competitors very, very recently, but before this, they're saying some of their other competitors, like, even if their chips were free, it would still make more sense to buy NVIDIA's chips just because of how efficient they are, because these chips use a tremendous amount of electricity. And if you have one that's not, you know, can't get enough work done per watt of electricity, like they're saying theirs are so much more efficient that even if their competitors were free, it still wouldn't make sense because they just consume too much electricity. Like, it just costs too much to operate them.
That's wild.
But at what point does that begin to turn the other way?
Right.
Like, if their chip's $1,000, okay, but what if the chip's $5,000? What if it's $10,000? Like, at what point does that start to turn the other way? A big concern I've heard recently from several people is that potentially China's been trying to develop chips, and their chips are pretty good, but obviously not to NVIDIA's level. Is what if they create a chip that costs 25% as much, but does 80% of what an NVIDIA chip does? Which is basically China's whole market. Like, everything they do is they do it for dirt cheap, and it does most of what you want it to.
Most.
Yeah. I think that's a very competitive take. I mean, do you think most people would care if their inquiry on ChatGPT took another 45 milliseconds to get you an answer?
Right.
Like, probably not. I think the days of investing in the market based on PE ratios is kind of gone with the wind, or at least at this point. It doesn't seem like anyone's really evaluating companies, or at least individuals or retail people are looking at like price to earnings ratios anymore into what they invest in. With that being said, I'll leave it up to you guys. Is the stock market a perverted Ponzi scheme? Are we just kicking the can down the road, hoping that our kids' generation or our kids' kids' generation buys all our equities at more than we paid for? Or is it all just circle back to the dollar losing value?
Before we wrap everything up here, I think we were talking before we got on air about the rule of 55. This is something new to me. You want to tell the audience what you were telling me earlier? Yeah,
this is new to me as well. One of my friends watched our last episode. If you haven't seen it yet, go check it out. And he informed me, I'd never heard of this, but you can actually retire at 55. And with the place you retired from, that 401k, you can actually withdraw from that at 55 with no penalty if you want to retire early. But any other 401ks that haven't been rolled over into that one, you can't withdraw from without being penalized. And then also Roths don't apply to that as well. So there are some caveats, but I didn't know that. You can actually retire at 55 and withdraw from a 401 penalty free.
Oh, that's kind of cool.
That's the first I've heard of that.
Yeah, it gives me a little more hope for the future.
Yeah, so you can still put money into that 401 and withdraw from it and retire early.
You got anything else for the folks?
Yeah, if you don't want to get lost in the African jungle, subscribe.
What? Who's trekking through the African jungle right now? Sign me up. It's probably warmer.
It's snowing, actually.
Shut up.
Got to shovel your way there.
All right, I made it to the end. Do I have some opportunities to win some money now?
Well, you don't, but everyone else does.
Come on.
The first person that is subscribed, has liked this video, and answers this question in the comments will win $20. I'll personally Venmo you.
Ooh, what's the question?
How much money did I say the Dells pledged toward the Trump accounts?
Interesting. Can't wait to see who gets it first.
First one to comment it, $20. I'll Venmo you.
All right, last call. You got anything else?
I like that. No, I don't.
Okay, bye.